released its latest round of economic data this morning. What do they say about Abenomics? And what are you advising clients on Japan?
Well, certainly the steps taken so far, which have largely been around intent rather than action, have improved the outlook certainly for exporters with a weaker yen. And there's some sense of improvement addressing some of the issues around deflation. We've seen consumer prices flat, ex food content, which is an improvement. But we don't yet see really the re-risking of portfolios. We don't see any increase, really significant increase in consumption. If anything, we're seeing savings rates continuing to increase in Japan. And we're not seeing domestic investors really flock to the equity market. A lot of what we've seen has been pre-positioning by foreign investors.
How should investors position on China after the volatility in money markets and worries over systemic risks in the financial system?
Well, certainly a tough time for China, trying to address a lot of the excesses of previous years. Clearly, the amount of credit growth in the economy has been an issue for some time, and growth has really been heavily dependent on this credit increase. Current administration is looking to address that. There are concerns about the so-called shadow banking sector growing too fast and by too much. And what we've seen since February really is the authorities there, PBOC, start to pull back from underwriting some of this credit creation and sending a serious warning, if you like, to both banks and those involved in some of this shadow banking activity, particularly those that are issuing wealth management products, that ongoing support should not be taken for granted. So there was an immediate shock to the interbank market, and since then we've seen PBOC come in and try and stabilise the situation. But I think it's pretty clear that the warning's been given.
What kind of financial reforms do you see it's coming next in China?
Well, the threat of interest rate reforms is clearly hanging over the head of banks. I think it's still a little bit too early for that, because the banks do rely very heavily on that net interest margin, which clearly will diminish if interest rates are liberalised. So that's no time soon, in our opinion. I think there'll still be a slew of reforms around the urbanisation policy. That's not directly related to the financial sector, but I think the way in which some of the infrastructure spending is likely to be organised going forward, it's likely to be more heavily dependent on the private sector. So to some extent, with the issuance of debt and bonds, that will have an impact on the financial sector. But I think what we're going to see in the near term is a push from the authorities in China to try and curb the amount of credit growth occurring within the economy and try and get that target down to about 12% per annum, which is going to be tough going given where it's been in plus 20% levels.